Hi traders, this is Houston Trong from thetradingedge.org, and this is your weekly market outlook for May the 6th to the 10th, 2019. And first and foremost, congratulations to all those who have been holding on to the SPYs. We hit all-time highs this week. We've been talking about those all-time highs since we started beginning the series back in the first week of March. Man, it's already been 2 whole months that we've been looking for these all-time highs. And we finally got them. So congrats to all those who held on to the trade. It wasn't always easy, but we hit that milestone. And let's now get into the charts and see where we go from here. Because the Qs and the SPYs are at all-time highs, but the Russell and Dow have still yet to catch up. So let's talk about those markets as well as some other stock names and some things like bonds and oil. So into the charts. So let's begin, as we always do, with VIX. So before we get into the VIX, let's just quickly talk about the coming week. So last week we portended that this week was going to be quite volatile, or the past week was going to be quite volatile, and it was. So Wednesday there were some fireworks, and I had been calling for that Wednesday to be a day to look out for, and that's the day we did get fireworks. It wasn't that prescient of me. Just the reality was that there's really 3 things that were going on that was likely going to bump the volatility for that trading session. Number 1, as we talked about last week, was AAPL earnings. AAPL earnings came out on Tuesday. Then we saw the markets basically respond quite well on the open on Wednesday, and then things sold off before picking things back up again on Friday. Also, on Wednesday, we had FOMC, which always adds volatility. And the last bit, which a lot of traders don't watch out for, they don't watch enough for, is the fact that we had the change of month. And because we had that change of month, there was the potential for a kind of switch or a flip in time frame alignment. And that's what we saw. We saw something like the VIX trade with full time frame alignment, except for the quarterly charts, to the upside for basically a couple of days before pulling back into the back below the descending trend line, which we'll show in a few moments. So it's a very, very important time of the month to look at, each and every start of the month, because that's the time when, if the buyers or sellers want to, if they want to get aggressive, they can take control of the charts for a temporary period until the other side gets aggressive again and begins to decide to fight back. And that's what we saw this week. So let's get into the charts now. That's enough about the lesson there. Let's talk about the charts, and we'll delve more into what that actually looked like and how it played out this week as well, and where things could possibly go from here. So into the VIX. So right now, VIX, just to start things off from the from the top level down, as I've been saying for a while now, VIX is outside quarter, inside quarter, and down. So this pattern, the inside bar and down, is good for the whole quarter. So we still have a good 2 months left in this potential pattern if it can stay below this low here of 28.12. 25.94 was the former all-time low on the VIX, on the VXX contract. Just be aware and notice that if you didn't flip your charts this week, we're no longer trading the VXXB contract. We're back to trading VXX. So it's back to the VIX contract that we know and love. Okay, so back to VXX. So inside, quarter, and down. Now on the daily, it was an interesting scenario here, right? So the all-time lows are that dotted line there. Let's just zoom in so you see the action. And we had broke below those all-time lows here back in mid-April. And we had just been dancing around that all-time lows for the past basically 2 weeks. If you take a look here, we've been trading inside a bigger broadening pattern, kind of megaphone pattern, which has been slowly inching downwards. We finally broke below that pattern, and as I've said before and alluded to, once you break below these support lines, they really have to stay below there, because if they don't stay below there, there's a chance that it can come back up through the range again, going back through the other side. And so there's that potential that happened here on the 1st of May when we finally got that change with the change of the month, where we had the weekly and monthly opens for the first time in a while actually below the opening price. And so that's what we saw happen here on the 1st of May. So zoom in there. You can see on the 1st of May, we opened down. It was actually a gap down, and the buyers bought it. back up through the range again and going back into this broadening formation. And so at this point here, at the 1st of May when it closed out, it really looked like at this point that the sellers, if they were going to step in, they're going to have to defend. Otherwise, you can come back through the range again. So that's what you're waiting to see, right? Can the sellers step in? And if there's weakness and the buyers can't push any higher, then you get this sort of situation. You're left with a shooting star, and this is an outside and up pattern. As soon as this low gets taken out, we're back through the range again. And the target's now is this bar's low, and then subsequently these bars lows. But it's a very, very nice pattern there, because not only did we have that outside and up back down pattern, but it's right on that descending trend line we've drawn for months now. And so that all played out in the last 2-3 sessions. So zooming in a bit even closer, let's look at the 4-hour chart for a second. And it was actually quite interesting to trade, because if you look at the 4-hour chart, you can see just how tight it's been, right? And so finally here on May the 1st, right there, right, you got that gap down I described already. We finally had basically alignment on the weekly and monthly opens and the daily opens. So we opened down here, and for the first time in a while, right, you have to go back way over here. Look, we have to go back way over here, further even, before you have that sort of confluence even further back, right, where you actually have the month here. See here on March the 4th, last 2 months ago, same thing. I'm looking at the left hand side of the chart here. Right, so you break above the monthly open and the weekly open, and you have that pop because you have time frame alignment. Before that, you always have areas of resistance you're going to run into. So when you have things trading above those areas, it's everyone who's looking at the charts believe it looks green. So whether you're looking at the monthly, weekly, or daily chart, they look green, right? And that's the power of using simply that filter. So in this case here, we had that, and then it popped up. So that was the Wednesday, the day of FOMC, the day of the Apple earnings. Now, to zoom in a bit further, this is an interesting perspective. If we go down to the 15-minute chart, let's zoom into the first again. Here is that sequence here. Okay, so here's FOMC, 2 o'clock on the Wednesday. So at 2 o'clock comes out, we always, if you ever trade FOMC, you always see this type of scenario where you have an outside bar put in right after FOMC. Right, because anyone who took that trade trying to guesstimate which way it was going to break, they usually get stopped out, because unless you put really wide stops, because they usually take out both ends of these ranges, right? So they take out the highs of this bar and take out the lows of that bar, right? So that creates that outside bar where the highs are higher than that high and the lows are lower than that low. And so this outside bar, right, if I need to draw it, it's basically a broadening formation. Can you see that? It's just basically a tiny broadening formation on the 15-minute chart. You can zoom in even at a tighter level. Let's say the 5-minute, just as an example. There's the 5-minute, right? And so you see that broadening formation play out. But before we get there, let's go back to the 15. So we go outside. We get the outside bar. Whoops, I deleted the wrong thing there. We got the outside bar right after FOMC. It takes out both sides of the range, and then it goes inside, outside, inside, and there's your 215. So a break above this inside bar is our outside, inside break to the upside, and look at that move, right? Full time frame alignment. Once it breaks above this bar's high and clears this purple line, it's full time frame alignment to the upside. So that's a wonderful trade with all the wind at your back, because you have that full time frame alignment. Okay, so the day ends here. So that's the end of the day. So you had a great trade here where basically you took no heat on that trade. So from here to there, right? So you put your stop below this bar here, and it goes right to like an 8-hour trade with no heat, meaning the lows never took out the previous bar's lows. So absolutely, you could just trail bar for bar, and you could have kept most of it, or some of it on till the close. And it basically closed right off at the end of the day. Okay, so really nice trade there on the 15. So if you're actually even more intraday, like you have even a deeper intraday focus, look at the lessons you can see on the 10. So the 10-minute chart, it's right here. So zoom in. We already know the broadening formation is there, right? We already drew it in. But here's a scenario. There's your outside bar from FOMC. It goes inside and down, right? So the guys who thought that was going to break to the downside, you can have the belief that might happen, but once this happens here, and this high gets taken out, anyone who got short here has to get worried that they're going to get stopped out here, because where's their stops going to be? There, there, and there, right? And they all get stopped out in one shot, right at 2:30. That's, you know, when the Fed started, you know, had their news conference, and they all got stopped out there, and then it chopped around a little bit, and then it took off like we saw on the higher time frame chart. Now, even if you have a deeper intraday focus, let's say take a look at the 5-minute chart and the lessons that can be learned there. So let's go back to our May the 1st. There it is, and there's our sequence that we're talking about now on a 5-minute bar. Okay, so really nice sequence. So there's your outside bar, put in right after the FOMC. It goes outside bar and down, right? We always talk about this pattern, outside bar and down. Once it gets reclaimed, they have to worry that it's going to come back up and back through this range again. So here, it chops around, right, for a while until the news, until they start the conference or the conference call, and then pow, it goes. Now, where's your entry? Let's say you missed this, you don't want to take this, you don't want to take these. These are legitimate because, you know, well, let's say you don't want to take these because you're worried about time frame alignment. You're trading below the weekly and the monthly open. You can say, okay, I don't want to take these because I'm trading against the bigger time frames right now. Look at these two setups there, and there, right? So outside bar and down, just like this scenario here. Outside bar and down, goes outside bar and down. Once this high gets taken out, it's gone, because we know the pivots that they're going to go after, right there. They get taken out here. Inside and up, fails, it goes outside bar and down. That's a buying opportunity. That's just a dip to be bought. Outside bar and down, because this is basically another fractal Browning formation on a lower time frame chart. They get stopped out and it goes up to the highs of the day. So many ways to get in that trade with full time frame alignment once it cracked above those orange and purple lines. So really, really nice trading on that particular day. So enough of the really macro intraday stuff, but again, some really, really nice trading around FOMC that past week. Now let's talk about what to look for going into the week for VIX. So as you said already, outside and up, that's what we know right now. Now it's down, so we're going to go after that pivot, and we want to watch out and see if it can take out these pivots below. VIX is very choppy though, right? So this is the issue with VIX, is that it's very choppy, and until proven otherwise, it's going to remain choppy, right? Because you're just really going into the lows now. There are no more pivots to go against. It's a lot easier to trade VIX when you're going back through the range again versus going straight in the lows, right? When you're going straight in the lows, you always have to worry that you're going to get stopped out because it's going to run out of sellers and then just pops back up again the next day on a gap up or something to that effect, and you get trapped. So it's way better to go after things like this where you're going back through the range again, because look at the day here. On Friday, it was down 4.76%. So just basically, it just collapsed all day long. And that's an easier trade than trying to, push these lows to the downside. Okay. So, VIX, again, easier trade is to look for it to pop back up again and then fade it, which I think is the game plan for most traders at this point. So, SPY, as we said before, congratulations to those Spider holders. Got those all-time highs this past week, and we actually ended. So the high was 293.94. That was the level we needed to clear, and we got that on the 29th of April. So it finally cracked above 293.94. It actually settled right below there. The next day, it settled right above there. So 294.02. And then on Wednesday, that's when we had the FOMC, Apple earnings, and the new month, and things broke down, right? So it looked quite bearish for those 2 days. We already saw that on the VIX, what that looked like. But by Friday, we got that outside bar and down, and Friday started by taking out this guy's high. I've been saying, once this pivot gets taken out, they're going after that pivot. And Friday, we closed quite strong, not far away from those the highs of the day at 294.03. So we're back above the previous all-time highs. So Spider still looking quite strong. Don't forget Spider on the 3-month chart, right? We're inside bar and up. So long as we stay above that inside high from last month, we're the bias is still up. But watch the one on Monday. So Spider ends the week, right, with a outside inside pattern. So which way does it resolve? We want to be watching that and seeing. We still have the monthly open above us. That's the issue, right? We opened up high, right? And now we're trading below the monthly open. So we have a bit of conflict now between time frames as we're sitting between the monthly and the weekly open. So wherever we open on Monday, you got to watch out that you don't simply get sandwiched in between these two levels and it starts to trade very, very tightly, which is possible. We've seen that with some other instruments, which I'll show you later in this video. So one final thing to look at. So again, watch and see how this outside-inside breaks for the 2-day pattern. And on the 4-hour chart, Friday was an easy trade. The bias is definitely easy because once you understood this, right, outside and down, you saw the potential for that to take out the high here to go back up again. On the previous day, I was already mentioning this, that outside and down. Now, if the sellers can't force it below this, then it can come back up to the range again. That's exactly what happened, because here went outside bar and down, then it went inside bar. That's trouble for the sellers because they ran out of selling strength. The buyer stepped back up again, and here's the worst case scenario, right? Here's the worst case scenario, because if you got short here thinking it was going to break down because you broke below some moving averages, right? So here on the daily, you're like, yay, it broke below, this is the 5, that's the 10 period. You got as low as the 20, that's the green line. You're thinking, okay, maybe we can get down to the 50. Here is trouble, because there you're inside bar, and the next day, what do? If you're short, they gap up against you, right? So they gap up against you now, and now you're trapped. So the whole day on Friday is basically a pain trade for some traders who got short, meaning they got short and they're like, okay, at some point I'm gonna have to cover, and they're just hoping that they're gonna find a graceful exit, meaning the market pulls back a meaningful bit so that they can try to either par out the trade or or lose less. Unfortunately for all the shorts on Friday, the markets did not barely pulled back at all on Friday. They just kept trending up for most of that trading day. If you look at the 15-minute chart, you can see here it was a gap up and go scenario, right? So gap up, and they just kept on going. So there was no chance for the sellers to get out of the graceful exit. So they really squeezed them all day. So that's what we need to watch out for now. For the spider, is that it just needs to continue. Okay, so there's your outside and down. Now you're looking for this high to get taken out. The question is, once that high gets taken out, maybe you buy that outside inside pattern on the 2-day. Where does it go from there? Because it's getting high up here again, and it can get grindy. Okay, so now the Qs. Qs had some really good price action on the week, and once again, starting from the high level, it's outside bar, inside, and then up, right? So we call that outside, inside, up to the all-time highs. Now we're trading, let's see here, about 2.1% above those previous all-time highs. The week ends off with a very, very strong candle. That is basically a momentum hammer. So very, very strong, meaning, we had dipped down here at one point, and the buyers just stepped in right away and pushed it and closed it right near the highs, right? So if you had gotten short here on this sequence, the buyer stepped in, and you probably got stopped out very quickly. And if you haven't gotten stopped out, then where's your stop? Because it's going back to all-time highs. So where's your stop here, right? So here's a nice little piece of information as well, right? There is the former all-time highs, 187.53. Look at the week. We pulled right back down to 187.53, dipped below, hit that 20 period moving average, and the buyer stepped in and bought it. Okay, so they stepped in, bought it, they defended that level, right? So there's your resistance. It now became support, and let's see where we go from here. There's just no stopping the Qs at this point. It's going higher and higher. So on the daily pattern, if you recall, we talked about last week we had that outside bar, right? And I said, okay, well, at this point here, you have the outside bar. How is this going to resolve, right? So here's the new week here. It was outside and down. I said, more than likely, they're going to take it back up to the highs again. Because once you get that outside bar and down, we talked about it already, once this pivot gets taken out here, the high there gets taken out, they're going after that pivot. That's what happened. It went outside bar and down. Then on Monday, they came in, bought, they broke this high, and then took out that high. Just a little bit. And then it fell back down again before ending the week on a higher high. Look at that. The high here is 191.49. That's, again, the high of the week. So they bought it right to the end of the closing day on Friday. So on the Qs, actually, let's just go to the 2-day chart for a second. You can see the volatility in the week because you have 2 outside bars in a row. Outside bars usually signify greater aggression by both buyers and sellers. right? Because we're getting both ends of the ranges getting taken out, meaning the buyers and sellers are getting both involved, and then one side's actually winning, to the effect that on Friday, we saw already, the buyers, showed their strength by taking back control and closing out those highs. So now you got to break above, this previous outside bar. So now you got this outside bar and up. If you're a buyer, what you don't want to see is you don't want to see this low get taken out, right? Because that means you've lost momentum. Because the momentum's on their side now. What you don't want to see is this scenario where you go outside bar and up, and then it comes back through the range again, because that's that shows you momentum is fading. On the 4-hour chart now, there's the pattern that happened on spiders, Qs, and on the Russell. So you had the outside bar and down sequence, followed by the inside, then back up again, taking out. This guy hasn't got taken out yet, but it's coming very close, right? So getting very, very close to taking out that high. So 191.49. Actually, didn't close up. No, 191.49. Did it get taken out there? No, not quite. So we still have a little bit of ways to go here. This is probably trading in the aftermarket, huh? 191.49. Yeah, because that's not where it closed out on this chart here. So interesting. All right. So let's just double check that here. Okay, so interesting. So for whatever reason, trading view, when I look at the 4-hour chart, it gives me a different close price than on the daily chart. So clearly the intraday data is different than their end of day data. So in any case, the daily charts do say it's a 191.49 close. So it is back to all-time highs on that daily chart. Okay, so let's jump back now to the next index, and that's Russell. So Russell, man, they're playing catch-up now. So Russell is only 7.94% away now from those all-time highs, and Russell looks like it wants to catch up because on the 3-month chart, inside quarter and up. Okay, so it pulled back. It did break the inside quarter earlier in the week, but it did pull back. By the end of the week, it did close above that previous quarter's high. On the monthly chart, it's also had gone inside month and up, but could not stay above the range, but it finally did so far in the month of May. So on the weekly chart, take a look. Okay, so there's your outside pattern and up. So we were looking at and seeing what's going to happen with Russell this week, right? We were wondering what was going to happen. And they basically showed momentum and strength by closing it above the previous outside bar's high. So as I've been saying with all these charts, we're looking for major reversals by first looking to see if they can take out any weekly lows. And so far, we know with the SPY, Qs, and Russell now, they've not even come close to taking out those weekly lows. They've defended. The buyers have defended each and every time. So there's no, it's if you're taking shorts at this point, recognize you're still going against the trend. So they have to be kind of profit takers or scalps, basically, because until you can start taking out those lows, there isn't a lot of justification to try to get aggressively short. I'll share with you that all the shorts that I took this week basically got stopped out. So it showed me right away that I was on the wrong side of that trend there, that I wanted to be buying and not trying to short. So the shorts, definitely got punished if they did not close them out. You got stopped out fast, or you're currently holding a trade that's probably underwater. Unless you shorted oil. Some of those oil names are still a little bit weak. But most of the indices, man, they're doing very strong. So on the Russell, here's a bit of a more complex pattern. I'll just share that with you first. Is if you look at the 4-hour chart, it's a fantastic pattern that played out. That's very similar to the outside bar and down scenario we showed in the SPY and the Qs. But here's the understanding. There's your outside bar and down on the sell-off that happened on the 1st of the month. Okay, here is the next bar that goes down. So it goes outside bar, down, and down. Okay, as soon as this bar comes back into the range here, there's a potential for this to come back through the range, knowing that this can now set up a bigger broadening formation. So if you can see it with your eyes, you can visualize it. I can draw it in for you. You're getting this scenario here, where you're now creating a new broadening formation, and this becomes the potential low of that broadening formation for it to come back through the other side of the range. Okay, so once it gets back into this bar's range here, it has potential to come back through here because it's the failure of momentum. As I've talked about already in this video, when you go outside bar and down, it's a momentum pattern because it's aggression, right? So you have buyers, in this case sellers, getting a lot more aggressive, and they're able to actually break this battleground that was this outside bar. They break it to the downside, and they break it down even further. All of a sudden, things shift. They push it back up to the range again, and these guys who went down here thinking it was going to collapse, they're getting trapped. And so then they're going back to the other side again. Okay, so it happens all the time. Look at this scenario. Okay, so there's your outside bar and down. comes back up through the range again. Outside, inside. So now it's another battleground here. It becomes a stalemate again. The sellers win it. And this time around goes inside bar and down. This guy fails, comes back up, and stops all these shorts out. Okay, so that's the power of understanding outside bars and seeing, you know, the action that I'm describing there, and getting an understanding of the participation that's getting involved around those key battlegrounds. So now, as a zoom out, so that's what happened on this 4-hour chart. It's not quite the outside bar and down scenario. It's actually it's a 3-bar scenario: outside, down, and down, then back up through the range again. Very, very nice pattern. So look what happens up here. So I drew this trend line a while back, right? So we connect this high, this pivot high, to this lower pivot high, and we close right basically at the top of that range. Okay, so now you want to see, where do we go from here, right? Because it's an outside bar and up, it's momentum. Just like we talked about Qs, it's momentum weak. This is a momentum move to the upside. Do we get more momentum to the upside? Because I think now the biggest threat isn't a meltdown, as I was saying in our chat room. It's actually a melt up, right? Do markets now melt up and potentially set up something a lot more dangerous to the downside if things melt up? This is what you probably don't want to see. It's fun to trade those types of markets because they're very manic, but at the same time, when you have those kind of manic markets, there's always a price to pay for it at some point in the future. So now, how far does this momentum take us? Do new buyers step in now with the new month and the new month underway? Okay, so let's talk about Dow. So speaking of let's talk about the Dow first, and then we'll speak about one of the Dow components. Now, Dow, just to go to the high level again, 3-month chart, outside, inside, and up, right? So we're calling for that all-time high now on the Dow. I've been talking about that for a while. Dow did give back a bit this week, so now we're 1.63% away from those all-time highs. So it has a little bit of work to do, but some of the components are looking pretty darn strong. So Dow here, on the weekly chart, it went outside bar and down. So last week we were saying, well, how is that outside bar going to get resolved? To the downside, upside, and what's going to happen if it stays in the middle? And we kind of have that scenario where it goes outside bar and down, but the bars step up, right? So it looked bad for a little bit, but as soon as the bars bring it back into the range again, the chances is going to go back through the other side. And that's what looks like it's going to happen now next week. If they buy the highs of this week's high, and they break it, they're going to go after the previous week's high, which is not that far away. So on the daily chart, where there's our outside bar, it goes up and down, and then outside bar goes to the downside. If you look at this here, it goes to the downside, and now coming back up through the range again. So on the 2-day chart, it looks like this. So on the 2-day chart, you got that outside and inside. So this is an interesting scenario here now, where we want to see which way this thing breaks, just like we talked about with the spiders. It also has the outside and inside. So right now, all indications are that we keep moving our way up to those all-time highs, but let's see which way it breaks. And if it breaks to the downside, does it reclaim it, or does it break back down lower? Because you're still fighting between this monthly open and the weekly open. So you're currently below those two ranges. So expect some choppy stuff if we get stuck there in between two ranges. Let's talk about oil, because oil was kind of in play this week, and it looked at some points quite ugly. And so this is something we need to watch out for. We talked about the risk of oil last week, and some of it did come to pass. So this is what you want to be looking out for. So oil on the bigger time frame chart, it's still a buyer's market, because you got that outside bar and up, and you still have this break above it and trading above last quarter's high. So long as you still stay above last quarter's high, you still have the chance to go after that pivot. But it's coming back in now, so you want to see what the sellers do and what the buyers can do to defend. On the weekly, this is what we were looking at, right? So on the weekly, here, last week I was saying this is a shooting star. If the sellers can take out last week's lows, this will be quite bearish. And that's what came to pass this week. Once it took out that low, things did get quite ugly for a while in UKOIL before they stabilized it at the end of the week. So on the daily, we were left with this scenario here. Okay, so you have your inside bar, that broke to the downside. So all week, right? So it opens up there, it just sits right at that weekly, right? That weekly open the whole week. Then if you get the month, the new month, and then on Thursday it breaks to the downside finally. Collapsed quite, it was a good sell off there, about 2.5% on UKOIL. And then on Friday we basically consolidate with an inside bar. So how do we break this inside bar situation on Monday? Does it go inside bar, break to the downside, or does it break to the upside? If it breaks to the upside, then this is an inside bar reversal, right? Because then they trap these guys here who thought it was going to break down further. They can break back above here again. It goes back up because here, if they break above this Friday high, it will clear the weekly and monthly open, and that would again put these pivots back in play. So let's see how they play that out in the next couple of days. So if you look at the 4-hour chart, it's quite interesting. So look at the 4-hour chart on this situation here. Here's the play. So UKOIL, by the way, it's a CFD contract. I just use it as a proxy for the crude oil futures contract, but it's a CFD contract. But again, this is what a crude oil contract would look like. A futures contract kind of trades 24 hours a day. So here's the day, here the inside bar. Okay, so you get this outside and inside. That creates this situation here, this inside bar day. It goes inside, breaks to the upside, traps the buyers who decide to buy the breakout. When it comes back to the range, bam, it collapses. Collapses with full time frame alignment to the downside. Okay, except for the quarterlies. That's not aligned yet. And so that was the scenario on UKOIL. And hard to catch though, right? Because some of this stuff happens like overnight. So that's the situation if you trade, CFD contracts or futures contracts. This is happening at, like 9 o'clock at night or between 9 and 1 o'clock at night, 9 o'clock in the morning, right? So that does that break here. So how do you trade if you're an equities guy? Well, one scenario is, everyone knows the USO product. And it's worth to pay attention to. The USO contract is not a great vehicle because it is a kind of it has basically no spread to it, which is good. It has a lot of volume, which is good, but it is a very small denominated instrument. So it doesn't, I personally don't find it a really good trading vehicle to trade intraday. But here's a good swing trade idea. Well, it's not quite a swing trade idea, but here's how you could have visualized it on the 4-hour chart. So here's that scenario with a new month coming in right there, and they go inside bar and up. So they bought it, right? So they have that scenario here. It looks a bit different, right? So the USO contract looks a little bit different than that actual UK oil contract. We still get that outside bar and down scenario on the weekly. Actually, on the weekly, it was an outside bar last week. Then it went down. But here's the trap. The buyers go inside bar and up. They cannot break above any higher. It goes inside bar. And here's the inside bar reversal right there. So once it breaks below this low, right, they trap anyone who try to get long to play the pullback and breakout back up again here. So they stop these guys out, consolidates, then it gaps down. So it gaps down and all, that's where everything broke down. So that it was a good setup because you could have played that one and expect and held and then you have to hold on to the you hold into the gap. But that's the tricky thing with the USO is that it gaps a lot because you don't have that 24-hour contract like the CFD contract. Okay, let's move on. Let's talk about bonds. So bonds now still was moving very, very slowly, which is to be expected because last month ended up as an inside month. So outside and inside, we're watching that. I had been talking about saying, how do you get out of that previous month, right? So how do you get out of March? Because March is a really big range bar, and it could not. So now you're sitting inside there, consolidating, and so this, that whole month of April, it was pretty tight. You can see that whole month here was some pretty tight trading. The bias is still, in my opinion, still to the downside because you're trading below the quarterly open. You're trading right at the monthly open. Look at the daily chart. Okay, but the thing is, you're sandwiched in between these two areas now, right? So you're between the monthly and the weekly open, and so you're just playing ping pong in between that tight range. So how does it resolve? And my opinion that I think we're still looking for this pivot here to go after, because especially if it breaks this, if it goes inside bar and down on the month, if we can get back down here again, it's going to take out that pivot low. Okay, So that's the pivot to go after at this point. So bonds just going real slow. So on the 4-hour chart, look to see how this plays out on the bonds. So on Thursday, we had the downward move that ended with the inside bar right at the weekly open. See how that weekly open holds things? Right at that weekly open. It pops up on Friday, but they can't really take it much higher than the monthly open. Look, it closes below the monthly open. It goes up and then ends the day inside bar. So now, if it breaks below this low, this 4-hour low here, Friday's last 4-hour low, then they will trap the buyers into buy reversal on the sell side, and then you can expect it to come back down again with a time frame alignment, because your week's going to be up here somewhere, and your month's right there, your quarter is up there as well, and so then you're going to have more chances to get back down again. So let's wait and see what happens now with TLT next week. So let's talk about emerging markets, EM. I know Asia, a lot of Asia was closed last week, so quieter trading over there this past week. But certainly the buyers did defend when they needed to this past week, because we talked about this level here being an important one, 43.35. That's the monthly low for April. And here's the pattern: outside and up. That's momentum. If they had managed to take out this low, there's the risk of it going back down through the range again with full time from alignment to the downside. So this week it came close. So the buyers, they stepped up, right? So when they needed to, there's that level. It came down here. And then this week it opens right there. It comes down, goes outside bar. Here on Thursday, it gets even lower. But look, outside bar and down, buyers step up. They defend it, right? They pull it right back up to the range again. And then on Friday, they gap, so they basically trap any shorts who got short down here, and now they're going back up again to go after some of these pivots. And we end the week inside week. So, it's notable, makes sense. We still got that, choppy stuff because of that inside week, but we didn't get a lot of action because we had all those holidays going on in many parts of Asia. So, EM, continue to watch to make sure they defend that 43.35 area. If that breaks, and there's news that, or there's reports that once again the U.S. and China may come to some sort of arrangement by the end of next week or this coming week. Let's see if that doesn't pan out, how this area gets defended or does not get defended. Okay, but on the 4-hour chart, look once again our favorite pattern: outside and down, inside and pop back up again. Now going after that bar's high. Okay, Bitcoin. So Bitcoin very, very bullish this past week, but moving slow. It's not. It's today. This week was up 8.71%. That sounds like a lot, but for Bitcoin, it's actually not a lot. But it's still because people are still not believing, and that's fine. It's a wall of worry that it is climbing up right now, and there's nothing more to say than that. It's going up. We got long here at 42.10 when I said buy Bitcoin when it breaks this outside inside pattern on the monthly chart. On the 3-month chart, it is inside quarter and up, right? It's good for the whole quarter. This signal, if it can stay above that high of 42.10. So on the monthly chart, it's just going up and up. Last month, it was up 34%. This month, already up 6.5%. So last week, all right, big green week. Daily, we had a big day on Friday. It was up 5%. And on the 2-day chart, nothing too notable to show up there. It's just going up and up and up. So grinding higher. So something I do want to show on the Bitcoin chart is that it's how do you trade this thing, right? Like if you're not an intraday trader on Bitcoin, how do you kind of buy this thing and hold on to it? And there's one way to do it, right? If you don't want to look at the charts a lot, you can look at something like the 12-hour chart. A 12-hour chart is going to give you 2 bars a day. Okay, it's going to give you simply 2 bars a day. That's all you need to look at Bitcoin is once a day, maybe twice a day, to see how each one of those 2 bars opens and closes. And so there's your buying opportunity that happened here on the 29th. Right, so there's the new week. Here's the new. Okay, so I'll zoom in. All right, so there's your new week right there. It goes inside bar, and then it breaks to the downside. Okay, but at this point here, we know the monthly opens down there, so the bias is still up, even though it's trading below the weekly open. That's a buying opportunity because it goes inside bar and down. As soon as it breaks above this high, that's your inside bar reversal. So anyone who's shorting Bitcoin here, they're going to be wrong very, very quickly. And in fact, they are. Once they break above this high, full time from alignment, right? So you're above the daily open, you're above the weekly, above the month, above the quarterly, it's full time frame alignment to the upside, and those guys get run over quickly. So you can buy this, you can buy that, set your stop below the low of that bullish hammer. If you're very conservative, if you want to get more aggressive, you can even put your stop below the low of this entry bar. And there, look, you're already up. You're up more than 10R on that trade. So that's a really, really good setup on the 12-hour chart. If you want to get even more granular and you have more time to look at Bitcoin, then use something like the 4-hour chart, because then you're going to get 6 bars a day. Okay, so you need to decide how you want to play that. But on the 4-hour chart, you could have got involved in this sequence right here. Wait for the time frame alignment to set up. New month, there, outside inside pattern, outside inside, and then it takes off. The issue with this here, anytime you're trading, the hardest thing with Bitcoin that I find to trade personally is that you have to be around the screens all the time. So on the 4-hour chart, even though it's you only get 6 bars a day, this setup happens between 4 o'clock and 8 o'clock. So are you sitting in front of your computer between 4 and 8? I most of the time am not. Usually I'm having dinner or doing other social things and not sitting in front of my screens at between 4 and 8 p.m. So but if you can find a way to automate that or do whatever you want to do to take that setup, then that was an exceptional trade to take to the upside with full time frame alignment. Okay, so just a couple examples there in Bitcoin. Now look at the total chart. We just quickly look at this chart here. Total is of course the all the crypto coins together. Not a lot to share there because it looks a lot like Bitcoin, although actually not trading as well. So right now, Bitcoin is once again asserting its dominance. So it is definitely the most dominant of all the coins, because right now the Bitcoin chart looks better than the total chart. Total is basically an aggregation of all the coins. So same thing though, inside bar and up on the monthly chart, outside and up now on the weekly chart, green on the days, and 2-day chart slowly grinding up, right? So there's your outside and down pattern. Inside bar, bam, on new week to the upside. Okay, takes out that pivot high. Very, very nice trading, because that takes out that pivot high right there. So you can get very, you can play those ranges there quite nicely by simply buying dips and then taking them off at the highs if you don't want to hold them too long. Okay, let's talk about just a few more things. So sector-wise, just one sector that's notable, and we're going a bit long in this video, but there's a lot of stuff to share. It was a very busy week. XLI, a very nice looking chart. Industrials. So what looks interesting here, industrials notable, we're getting close to those all-time highs. So on industrials, we're currently, last month was an inside month, broke to the upside, slowly grinding its way back up to the highs now. We end the week outside inside. So the sellers could not put any pressure on, any meaningful pressure, right? So here's the pattern, outside and up, okay? You have to worry if it comes back in the range here because it can break it back down. But no, the buyers, it did break down a bit, but the buyers stepped in here now, consolidated. Now if they break above it, they're going after that pivot high and they're going to grind up to potentially all-time highs. So watch XLI, and the stocks are inside that particular ETF or that particular sector. Okay, this week Disney's reporting earnings on Wednesday, so I hope you've enjoyed that new Avengers movie. I'm actually going to go watch it on Wednesday. Actually, I think I'm going to go check out the Avengers on Wednesday. But Disney's earnings on Wednesday will not reflect the earnings from the Avengers movie yet. That's not going to come out to next quarter when they actually get a chance to recognize that revenue. But Disney, what an amazing chart. All right, so let's look at Disney really quickly. Look at the 3-month chart on Disney. Let's take a look at some of the macros. Outside and inside and up on the quarter. All right, so this thing is just grinding up, outside, inside, up on the quarter. Now it's going it's at all-time highs, and it's come back a bit now, but it's it's just going to all-time highs. So continue to watch Disney. I think it's very strong. Let's see how it plays out now for the rest of the quarter. Some more longer-term charts. Let's look at the some other names that are interesting. CSIQ as a bullish play. So outside. Sorry, this is that's a monthly chart. So I want to show another one on the quarterly chart. Let's look at Apple. So Apple, was all the news this past week with earnings. And look at Apple, right? Outside bar and down now breaks above there and goes back up. So outside and down, back up and going back up potentially now those all-time highs. So watch Apple now and continue to see how it gets back to those all-time highs, because it looks like it's going for it. All right, now people are very, very positive on Apple. So long as it stays above this 197.69 area, you can expect it to continue to grind back to that all-time high as an important pivot. Another interesting macro chart is Delta Airlines. So outside and down, now grinding back up again to potentially get back to those all-time highs. So look at Delta right now, 2 inside days in a row. Delta's going to resolve at some point. And I think they might have, when do they have earnings? I'm going to quickly double check Delta's earnings to see. I think they may have already, in July. So yeah, July is going to be the earnings. So right now it's kind of getting tight. Something's going to happen. So we need to keep our eyes open for that one. Some of the other names, take a look at, we talked about, I shared with you last week, Play. So this is a great one. Outside, inside, and up now, going after that all-time high. This week, look at the scenario here on the daily. Goes outside, bar to start the week. Goes down, inside, and they basically, they bounce back and they buy the inside bar and it goes back up. So now, expect 61, this area here. I think it's, 59.32? 59.32, okay. Yeah, expect those areas to get tested once again, and the high here is 67.05. So great looking chart on Play. Another name that we talked about a while back, but let's revisit, Coca-Cola, slowly going up, right? So Coca-Cola, if you recall, the issue with Coke is that it's inside quarter right now, right? So you're still trading inside the previous quarter, but the monthly chart looks great, right? So there's your outside, inside, going back up, potentially going up here to 49.94, which it got very close to. But here's your buying opportunity on KO this past week. It goes inside bar and down, reversal. Now they bought it. They can stay above this area here and climb higher. It makes a good case to go back to this this high here in February. Okay, a few more, 2 more charts to share on the monthly. Some names to put on your list. Not Macy's. That's not the chart I want to show. CSIQ. I talked about that earlier. Outside, inside, back up again. You stay above that monthly high. We're grinding our way back up. So look for pullbacks as an opportunity to play that bigger campaign trade back to all-time highs. And one that doesn't look as good, the opposite side, is CRZO. So oil stocks, once again, not looking so hot. Outside and up, and now coming back down through the range. Okay, so here's CRZO. You're looking for this thing to get back down here, the low of 991. So if it stays below the previous month's lows, right, of 1175. So long as it stays below here, 1175, let's mark it on our charts. Okay, we're looking for pullback opportunities to short going into those into these lows here that are put in back in March. All right, so should be another interesting trading week ahead of us. Still earnings, so you need to watch out for which positions you're taking overnight. You don't want to get caught in an earnings name that you don't know about. So continue to watch those names and the subsequent news that comes out, and have yourself a great trading week. I hope you have great profits and happy trading.